Now, some stocks have a really high price, but does that mean they're overvalued? Hello there and welcome to another video on investing in the stock market. Any questions, drop me a comment. If you enjoyed the video, please subscribe. I answer all comments, by the way. So we're right now in the biggest bull run in history. This has been the best time to be invested in the stock market. So I think this is a good time to discuss when stocks are overvalued, because a lot of people are falling into the trap of thinking something is overvalued just because it's expensive, which is not the case, because everything is relative and you have to put it in perspective. A stock price reflects the value of the underlying business, and the stock price is controlled by investors, and depending on whether investors are pessimistic or optimistic, the stock price will be high or low. So a high stock price does not mean the company is overvalued, and a low stock price does not mean it's undervalued. It's all about how optimistic investors are. So sometimes a high stock price can be a good sign. And the most expensive stock on the stock market right now, Amazon, has always been notoriously expensive, and a lot of people have said along the way it's way too expensive, you shouldn't invest, but the company has grown into the stock price, and now no one's saying Amazon is overpriced because we've realized the company is actually worth the high stock price. So if you want a high multiple, if you want to have an expensive stock price, you need growth. And that's what investors are looking for, because it's all about the future. A stock price doesn't care about the past or the present, it's all about the future. Investing is about predicting the future, and the most important thing is growth, how the company is planning to execute their strategy into the future. And so I find looking at a company's current state, like how much assets does it have, how does the books look, how does the cash flow look, for me that's not as important as growth, because if a company is growing at 30-40%, it will eventually deserve the stock price it has. And today that's very much so what investors are actually doing. People are gravitating towards growth stocks such as Facebook, Alibaba, Amazon, Nvidia, Netflix, Tesla, these sorts of companies. And I'm not a big fan of indicators, I don't really look at them, but these are some indicators you can use to try and determine whether you think a stock is worth the price you're paying. So we have price to earnings ratio, which is the stock price compared to how much money the company makes. Price to book value, which is stock price compared to the assets a company owns. But these vary a lot, right? The PE and PB ratio varies from nothing to 100 based on what industry the company is in. So this can be a little bit misleading. So do keep that in mind. But some of them are useful. You have price to cash flow, price to sales, and then price to earnings growth. So you can definitely find some of these indicators, and if you want to compare similar companies, so if you're comparing 10 banks, then you can use these indicators to find the best bank. But if you're just looking at a lot of different stocks, these don't really apply because they're relative to each kind of company. You know, it depends if it's a young company, a big company, small company, tech company, industrial, if it's a bank, whatever. And so to arrive at a stock price, we look at the business, right? And we try to determine, is the business worth the stock price? And these are just some of the things you have to look at when you're investing in a company. Things such as, you know, fundamentals, balance sheets, how healthy is the company financially, strategy, do you like the strategy and are they executing it? Innovation, how strong is the innovation now, and do you think the company can keep innovating and stay ahead of the competition? How is the pipeline looking? Is the rate of innovation going up or down? Brand, for some companies, brand is very important, like Apple or Nike or something. Brand is everything. So is the brand growing stronger or weaker? Growth, the most important thing. How fast are the revenues growing? There are companies growing at the same pace as the GDP, at 3 or 4%, like Walmart. Then you have companies like Amazon, which are growing at like 40-50%, ridiculous rates. Now, just because a company grows fast doesn't mean it deserves the stock price, but growth is important. But this is also relative to where the company is in its lifespan. Is it an old company or a new company? Management, do you like the CEO? Do you like the management? Are there a lot of firing? Are there a lot of hiring? How stable is the core team? You want to have, CEOs staying on for a long time. And the best thing, if it's a young company, is to have a founder CEO. The person who started the company also runs the company. It's usually the best anyways. So this is just the company you're looking at. Then you're looking at the macroeconomics. These are not as important as these, but you can look at the industry it's in. If it's a tech company, it's probably a way more expensive stock than if it's a bank or a mining company or an industrial company. How is the economy doing? How is the global economy doing? How is the local economy going? Where the business customers are. So some companies actually benefit massively from a growing economy, such as luxury brands and banks. It's very important for them that the economy is doing well, interest rates, stuff like that. How is the demand for the industry? How is the demand for cars? How is the demand for, financial analysts? How's the demand for iron or copper or lithium or gold? Because demand and supply is everything. And the company can't always control how much demand there is for their products or services. So politics as well can be important, just like the tax break we had in the US. This is very important for some businesses, not so important for others. Also, politicians are also huge people, and they like certain industries more than others. And some governments are even cracking down on fossil fuels, and they're actually subsidizing renewable energy. That's a big thing. The economy policy, so the interest rates and such, is very important for the banks. Workers' visas, immigration is important for companies. Some companies rely on outside workers, and some countries rely on immigrants to boost their economy. So it's very important. And if you like all of this, it doesn't really matter what the stock price is, just buy the company. But if it's a really high stock price or a really low one, you might want to look at this and see if there's any disconnection between the stock price and the business. But this is the most important thing. So what I would do is look at this, and then that's what I look at. I look at the management, innovation, and growth, and that's pretty much it. And if it's a good product. And then I just, buy almost regardless of the stock price. So go out there, have a look, do your own research. This is just my humble opinion. So good luck, and I will see you in my next video.